Hey folks, Tom Gentile, welcome. Optionetics, Tom's Trading Room. My market update for July 23rd, 2018. You know, we're still in earnings season. We haven't gotten out of that yet. So I want to discuss for just a few minutes how I go through and look at earnings reports and look at earnings updates. So this can all be done on our tools. And all you got to go do is head to www.tomsoptiontools.com. There are a couple of different ways that I look at earnings announcements, but the one thing I don't do is I do not trade through earnings. I don't buy calls and hold them through earnings. I don't buy puts and hold them through earnings thinking something is going to go down. 9 times out of 10, that doesn't work. The option premiums are so high when you buy them that many times, even if the earnings report goes your way, you lose money on the premium drop with the IV drop on implied volatility. So this is what I do. I look for patterns. And so, for instance, earnings announcements are out this week include companies like GE, Alibaba, Halliburton, AT&T, Verizon's coming out, Suncor, Qualcomm, and a whole bunch more that I just simply couldn't put on this presentation. Now, you know, one of the patterns I can look at real quick is if I come over to the right, I can look at what stocks consistently beat their estimates, okay, with actual earnings. Well, GE doesn't do it, that's for sure, but come on down a little bit and you can see here's an 8-0. That's Alibaba. So for the past 8 consecutive quarters, Alibaba has beat its earnings expectations. Come down a little bit more, you can see UTX. 7 quarters in a row, it has beat its earnings expectations. This is all good stuff because this creates patterns. Now, whether or not that equates into higher prices, obviously, we need to dig a little bit deeper as we go through and look at these earnings patterns. So the next thing I'll do is I'll look at the 2 things that cause option prices to go up in value, okay? 2 patterns. Number 1 is a pattern where we see price change, and another one is a pattern where we see implied volatility change. Let's look at price change first. So I ran this morning as well. This is the price change, the best price change before earnings. All right, so I went over into an area where I can go to earnings rankings and earnings effects. So the next few charts that you're going to see are coming from our earnings effects on Tom's Option Tools. Best price change over the last 4 earnings. You can see that, and when I say price change, it shows the median price change. What it doesn't tell you is whether or not these are all up or down, but that's what the next column's for. So you take a look at Whiting Petroleum, has the best price change for this week's earnings that are coming out. And so I look at Whiting, 6.62. Here's the problem. It was up 4% one quarter, down 5% one quarter, down 8% one quarter, up 9% one quarter. That's a coin flip, okay? That's not a pattern. But take a look at Alibaba. Okay, we saw that before. Remember that 8-0 on it beating its earnings? Well, it's also really good at moving up before earnings. And for the last 4 consecutive quarters, it's moved up nearly 5%. I see a 4, an 11, and a 6. Okay, Electronic Arts, same thing. It had a 5% up, 4% up, 5% up, and 7% up. This is all within the week prior to the earnings even being announced. All right, so there's a pattern or a group of patterns where we're seeing price moves, and I look for consistency. The next thing we can do, we can look at implied volatility. Which stocks have the most IV rush into them, meaning that people are rushing in, buying the calls, buying the puts, and pushing the prices higher before the earnings announcement even comes out. Here you go. Also, we can find this in our earnings effect column in Tom's Option Tools. We have all this stuff, and you can see here, Archer Daniels Midland has the biggest jump right now in IV percent change. That means that we're seeing the biggest jump in terms of implied volatility increase. There's Corning, Under Armour, McDonald's, etc. So, and again, I only put the top 15 on here. But if you take a look at, for instance, what's moving higher in terms of actuals beating earnings, what's moving higher in terms of price, what's moving higher in terms of implied volatility, if you crank all that together, which I did, you'll find that for this week, I'm looking at stocks like Lockheed Martin, Lam, Electronic Arts, Under Armour, Intel, and many other ones that are coming up for this week's earnings, all right, and even into next week. So, what do we do with this information? Again, I like to buy before the rumor and sell before the news. Now, what I'll do is I'll take a look at these stocks and I'll try to find something where the options make sense in terms of buying them before earnings and selling them before the news. All right, but you can also do this to the downside, just simply looking at price drops and looking at buying puts, for instance, as you get closer and closer to the earnings report as well. All right, there's many ways that you can skin earnings, but the one thing I don't believe in is simply buying before an earnings because you think something is going to go higher and you're going to trade it through earnings. Those are grand slams, all right? And grand slams are great. Babe Ruth is one of the kings of grand slams, but you know what? He's also the king of strikeouts. 5 strikeouts, being the strikeout king, 5 years. He was the strikeout king. And although a lot of people remember him for home runs and grand slams, he struck out many, many more times. I don't like strikeouts. I like singles. I like doubles. This is one way of doing it, folks. All right? Hope you enjoyed this video. You know, we got a 7-day free trial to Tom's Option Tools. If you've never used it before, www.tomsoptiontools.com. Once you go there, you'll see the 7-day free trial link. Just click on it, and you can have access to all of our option tools. All right? Thanks a lot, everyone. Have a great week. We'll talk soon. Bye now.